Hi, everyone. Thank you so much for tuning in on Sunday morning or Sunday afternoon, basically Sunday, wherever you are. This means a lot, which also says and shows that you're sincerely committed and you're really curious about what I'm going to say and what I have to say. So thank you so much for that. Very quickly, let me first share my screen and give you a bit of intro of who I am and why I am doing this. Cool. I think you can all see my screen now. Good. So my intro is I'm from a very small town in Madurai, in India, in Tamil Nadu called Madurai. And I've lived there all my life till 21 years, where I thought science and engineering was the ultimate freedom in life and the ultimate thing to do in life. Soon I realized that I had nothing else to do other than knowing a few physics laws and few formula, which really didn't give me that full spectrum perspective and really teach me how to be a great leader, which is when YF happened to me. I would always say YF is that extremely pivotal launch pad in my life, which really brought me into my full self. Really taught me how to think properly, think critically, right, communicate well, which launched me into a flurry of other careers, which led me to where I am today. So my career is, I've spent a little bit of time in a big tech company, spent a very short stint or one project in a big four accounting firm or a consulting firm. And I really realized I'm not cut out to be working in a big huge organization, and then joined as a founding team member in a fintech startup in India. So I was doing the fintech startup thing for about 3.5 years and 4 years. That's when I realized I've learned as much as I can in India, and now I need a global outlook. While YF gave me that global outlook, it was I wasn't placed in a newer environment. So going out of the country was the decision then to sort of put myself in an unknown environment and learn more and pick up more. So that's how the MBA happened. And then I sort of transitioned into finance. So why finance? Why VC? So the story is while working with the startups, I was fortunate to work with some of the top VCs who are investors. So such as Sequoia, Lightspeed, Index, Coatue, Ribbit, and also a PE fund. So I think every single time I met them and I spoke to them, whenever I sat in a board meeting, they were super inspiring, extremely valuable in terms of the comments, the insights that they brought in, which intrigued me, I should say. And then I realized, okay, that's something that I'd like to try and test out. So that's how I landed in VC world. Okay, without much further ado, I will now dive into where Varya rightly said, two parts of this presentation. One is, how did I choose to do my MBA? Why? What are the things that I considered? What are the things I should have considered, but I didn't know, but now I know because hindsight is a blessing. And then from there, the second part is segue into getting into VC, breaking into VC. So MBA journey, top things to consider. So in my life, so first of all, I want to caveat this by saying everyone's journey is unique, right? So what I'm going to tell you is what I did and why it was right for my circumstances and my context. So that being said, there are few transferable skills and transferable valuable insights that you can take and you can apply to your own journey, your own life, and your own context. So when you're moving from India to any other country where there's a money conversion, right, and there's a visa issue, there are a few things that you need to consider, because doing an MBA is one of the biggest investments that you'll make in your life, and you have to make a prudent, well thought through decision. So when you're considering schools, you need to think about four things which are material, right? Which you can't change, which is outside your control. So the first thing is, everyone looks at MBA for a few reasons. One, they want to change geographies, they want to change their career line. Let's say I was in startups, or I was in business strategy, then I wanted to move to finance, or someone was doing product, now they want to do PE, or anything like that. So you need to look at, and you're always also thinking about, so moving geographies, moving industries, and also moving up in your career journey. So first decide what you want to do. And then once you've sort of decided few ideas of what you want to do, you have to look at the salary, the average salary for last 3 years your school's giving. So this changes very much depending on the school and the location. For example, if you're looking at European schools, UK schools versus the US schools or Asian schools, this average salary is going to be completely different. So you need to think about where you are in your career level and what is the right jump for you. What is the right justified jump for you in terms of your salary. And then you don't just look at the overall salary, but also look into which industry that you want to transition into and what's the average salary for that school for the last 3 years, because that's very important. And I'm saying 3 years because you don't want to look at an odd year like a COVID year where things are going to be skewed, or a boom year where things are going to be skewed again. So look at the 3 years average. The second thing is the most important thing, especially now when everyone is having the opportunity to go abroad. But what's happening is a lot of people end up not getting a job and then getting back with a huge debt without any placements back to their home country. So you have to look at the percentage of students placed in the 90 days of graduation. So usually when you're looking at MBA schools, there's not going to be a proper placement function, just like how Indian schools have. Yes, there's a career support or career advisory team, but they're not going to guarantee that job for you. They're there to sort of nudge you, help you with some prep materials. You have to look at percentage of students placed in 90 days of graduation. So that's another important metric you need to consider. And then the split of industry, concentration of placements. Usually these schools, they publish a report. You can also look at the industry. So you can decide, okay, I want to get into finance. Does the school place enough people in finance? So you have a chance. So I want to get into consulting. Does the school place enough people in consulting? Some schools pride themselves as impact or non-profit or public policy oriented. Either they have good professors there, they have good placement programs there. So you have to be very specific about what you're choosing. And the other most important consideration is one year versus 2 year, because that determines your strategy for the next 12 to 48 months. And that also determines your financial setup. So how much do you have? How much do you have to raise in debt or crowdfunding? How are you going to finance your MBA? So these are the 4 main things, apart from the things that's already available on the internet in terms of your GRE or GMAT scores, and what is the percentage of admit that's available. So these are the basic things. But for me, what was critical and what I learned after coming to Oxford is what I should have done better. And there's a lot of information available about the US schools on the internet, but very few available for European schools and the Asian schools, which are actually top programs, but it's not as well marketed as the US schools. So it's very important for you to either reach out to these schools, ask them for these information before you make your decision. Now, I did a 1 year MBA program. And why did I do a 1 year MBA program and why was it right for me? First thing is I felt that I'd studied a lot. As in I did 4 years of engineering and I did 1 year of Young India Fellowship, which was phenomenal. And my aim for the MBA was to go into a program which is in a different geography. So it gives me that geography jump. And that puts me into the job market as quick and as fast as possible with a proper degree, not like a summer course, not a certificate, but a proper degree. So the 1 year program was the right thing for me. And also with 1 year, with 2 years, you have to pay double the fees. And I wasn't at the place where I could afford that. So I think the 1 year program fit very, very well for me. So when I gave my GRE or GMAT, I was looking at all the 1 year MBA programs and I was only applying for that, which also saved me a lot of time and a lot of headache, because each of these schools' application process is not easy. They're long, they're strenuous, they're complicated, and as any aspiring applicant, you want to give your best shot for all of them. So I think instead of doing a spray and pray strategy, which is I'll apply to everything, I sort of really picked the schools that had 1 year MBA programs. And so when I said 1 year MBA programs, a lot of US schools only had 2 year MBA programs. So those were all off for me. So I concentrated on European schools. Now, with 1 year MBA, while these are the pros, there are also cons. So the con is you don't have enough time to find your job. You don't have enough time or the break to get an internship where you can perform really well to sort of convert that into a full-time opportunity. These things are not available for you. And the most important thing that you miss out is your wisdom from your seniors, which is very, very important, especially when you're in a new geography, when you're in a new context, when you want to network as much as possible. So how do you then prevent or mitigate for these cons is that you need to start very, very, very early. So what I did and what really helped me and what I learned from my peers during this 1 year MBA program. So you need to start 3 things before you even get into the school. So let's say I went to Oxford, the school or the semester starts in September. I started reaching out to alumni in the areas or in the industries that I want to enter into. I think from June, April, May, June, I really started reaching out to alumni and started making these connections. I knew I wasn't so sure what I wanted to do because there's FOMO. Let's be real. There's FOMO about where you want to go, what you want to do. So I was trying to get into consulting. I was also trying to get into product because I had the tech background. And then I was also trying to get into IB, investment banking, which is sell side finance, which is one of the most toughest areas to crack into. So I was reaching out to all of these sectors of alumni in these 3 verticals, and I was having early conversations with them. Why it was important for me is they already told me how I should prepare myself for the next 9 to 10 months. They told me when applications are going to open, what I need to prepare for. So I started doing a lot of things. In hindsight, what I should have done is really pick 1 or 2 instead of doing 3, 4, and really double down on those niches. I think that would have helped me much better. So I started connecting with the alumni. I started looking at job applications. So one interesting thing or one important thing you need to know is there are something called summer internship or summer job applications or associate programs. A lot of big companies have. Morgan Stanley, JP Morgan, Citi, Goldman Sachs, Microsoft, Facebook, Google, they all have something called the MBA summer program or the MBA associate program. So, and the application timing and when you get into the job is so skewed, right? So you start applying at least 6 months prior, and then you have this process, and then you only start doing that either during your semester break or once your program gets over. So the application process and when you actually do the job is at least 6 to 8 months apart. So you need to keep a track of them and start applying. So that's what I did. And the other thing is, okay, internships or apprenticeship. So why is this important? A lot of people, especially if you go to the US schools, a lot of people take up part-time jobs within the campus to sort of get some, either get experience or get some pocket money to really take care of their everyday expenses. What I did, I also did my MBA during the COVID year, which was a blessing in disguise, I should say. Because I didn't have a lot of socials that were happening. I had my evenings free, and I wanted to protect those evenings. So I signed up for these remote internships in finance, which was also one of the things that I wanted to do. These were unpaid internships, but one thing that I realized while speaking to these alumni was that I had nothing to say that I knew anything about finance on my CV. I had my startup gigs, I had my engineering gig, but now that I wanted to transition into the finance world, nothing on my CV read that I knew anything about the 3 financial statements or modeling or the F of finance. So now that I'm studying all of that in my schools, I'm taking all the finance related courses, that's not good enough. So your CV needs to attest that you've had that hands-on experience. So I sort of applied to all the jobs out there, and then I got a few internships where I could call myself investment associate. Right. And it also worked out very, very well for me. So in the morning, I'd go to finance classes, and in the evening, they'd ask me to do the same thing, do a model or do some sort of market analysis, and I'd do that. So that sort of added up on my CV. So while I had the 10-month gap where I was in school, I was also having my CV build up, which led me to have a very, very cool internship at the end. So these are the things that I started doing prior to getting into the program, as in being extremely diligent and structured in my approach to seeing what do I want to get out of this 10 months, and where do I want to be, and how fast can I achieve that? Because time is of essence. Then once you know what you want to do, so in my case, I want to do consulting, which is the most generalist thing on earth. And then I wanted to do product, and then I wanted to do investments. So as I entered the program, I realized I don't want to do anything tech. That's not me. So now I had two choices: consulting and then finance. These two things are easy to sort of these two things have so many things in common, because even in consulting and finance, you have to think about macro and micro. You need to have structured approach to doing things. You're doing market sizing in both of these cases. You're doing financial analysis here more in the investment jobs, but not so in the consulting gigs. But let me tell you this: BCG, McKinsey, Oliver Wyman, all of these big companies, Bain, they also have a special consulting arm that consults with the PE houses and the IBs, where they're consulting them on buyouts, M&As, and stuff like that. So if you're getting into that function, you have to do the modeling. You have to understand the financial aspect of it. So it sort of worked out well for me. So I also chose all my subjects, all my extracurricular activities, and also the network. So during the school, your professors, please network with your professors, not only in terms of building a good relationship with your professor or your lecturer, also your TAs, and ask them who are some of the students that they remember that got placed in the right industry of your liking. So they will give you intros. So also network through that. Warm intros are always better, instead of you writing out a cold hi, I want to connect with you. Yes, that works out, but if it comes through someone else's referral, that's always much more helpful. So these lecturers and teachers or TAs not only can give you access to alumni, but they can also give you access to industry experts, saying, hey, this is one of my students, she or he is extremely interested in this field, she wants to have a chat. And something like that can really open up doors for you, and you should definitely tap into that. One of the things that I regret not doing so much is really tapping into the teacher network or the Oxford network. So I'm trying to do that now, but it's not the same as you doing it when you're in school, when you're already connected to that alumni, that community. And the third most important thing that you have to focus on before school, during school, and after school is your CV and your LinkedIn presence. A lot of internships and a lot of hiring managers or talent headhunters, they look at your LinkedIn as your proxy for your presence, as proxy for what are you following, what are you interested in, how do you present yourself. So think of your LinkedIn and your CV as artifacts that speak about you and for you when you're not in the room. So it's that important that you really have the most thorough, most up-to-date, and most concise things on your CV and your LinkedIn. I don't want to stress more into the CV aspect now, because each school has its own formats and they'll give you certain tools that'll help you perfect your CV. But don't think it's just a CV. It's one of the most important things. So it's your ambassador. It's going to speak for you when you're not in the room. So these are the things that's more important. So in these two things, I've spoken about my most important consideration for choosing an MBA school, the things that I didn't know well, because I only looked at prestige, which are the most prestigious schools to get into. And I think, while that's good, because brand does help you a lot. Brand does help you get your foot in the door. It's not just that. You also have to think about how many people similar to yours, how many people are able to shift geographies or shift fields, where does a school place their students, and what is the average salary. These are the most important considerations that I didn't think about. I wish someone told me to also pay attention to those. I would have saved some money in application fees, actually. And then this slide is about how do you think about structuring your tenure, 10 to 12 months during school. What are the things that you need to look into, that you need to prioritize if you are thinking about getting a job soon and you have a loan, you want to pay that back? This is what helped me. Now, I want to go to the next bit, which is breaking into VC. So I want to start with some of the conversations. I had many conversations with alumni, and few people told me, why would they hire you? What is that different that you have that you bring to the table? You're such an odd candidate to get into VC. And some people told me, you want to get into the European VC market, but you've never lived here. You don't know the ecosystem well enough here. So what are you going to do? And some people told me, it's going to be so hard. The VC is such a closed industry. You need to know, you need to be there, do that, know a few people, call in, name drop before you can get in. And then there's one alumni who told me, just keep trying. I mean, keep trying. Over time, you'll be the one that's been there, done that. You must have spoken to so many people. Then the next time a job opportunity comes up, they're going to remember you. So yes, certain industries are hard to break into, but they're not impossible. So it sometimes can feel very, very frustrating, because I think I went through 20 interviews with top funds before I can crack a mid-market or a tier 2 fund. And I realized every single interview that I did, I realized, I should have done that better. Oh, I should have done this better. So I sort of took that as a learning opportunity. I mean, it was sad, it was horrible, it was excruciatingly painful. I kept thinking, you're not good enough, you're not cut out for this job. But I think as I calmed down and really thought through what happened and did a retrospective analysis of my interviews, I realized what I didn't do well and what I could have done better. So yes, it could be difficult, but it's not impossible. You can do it too. Now, first things first, do you really want to be a VC? So this is an important question, because this is another question, just like an MBA school, as in is prestige, is glamour, is the brand, everything. And you also need to think about the life choices that you'll be making as a VC. And these are the things that no one told me, because we see so many things about how VCs are rock stars, so many TV shows are coming up. So it's such a sexy place to be in and glamorous space to be in, but you need to think about all of this and make the choice for yourself. So the VC salary is different from your conventional salary. There's something called a carry and a bonus, which I will not get into today, but these are terms that you need to Google and understand before you sort of make the decision that you want to be in. Now, carry is something, let's say it's, to be very precise, it's a share of the profit pool. Now, while that's a very sexy thing to think about, share of the profits of the company, that can only happen if the company is making any profits. If the company is not making any profits, your upside is zero, right? And most VCs, most VC funds, what they'll tell you is, because you have this share of the profit, I'm going to keep your salary very, very, very low, which is a downside, because let's say your peers and your friends are working in consulting or investment banking or product or tech, their base salary is going to be at least 2x or 3x your salary. So and carry is something that happens once in 8 years, right? So you need to think about your financial position. Where do you want to be in terms of your wealth generation? What is your financial plan? Do you have a family? Do you want to support your family? And think about all of that very, very carefully, and negotiate your salary and think about your career choices. Now, timelines, like I said, it's an 8 to 10 year game. And this carry, which has been promised to you, if you leave at any point in time, in this 8 to 10 years, you might forfeit your carry. So that's a huge risk, but also a big lock-in effect for the fund. Now, before joining a VC fund, do you want to join an emerging VC or an old vintage VC? What does it mean? There's a boom in the VC industry now. There's a lot of emerging managers. What is an emerging manager? First-time VC funds. Let's say I go out into the world. I've been in investments for 3 years, and now I start my own fund. I'm an emerging manager, right? And my structure, it's just like a startup. So I'm a VC startup, and all vintages are the big names that you already know, like Sequoia, like Lightspeed, and all of those guys who manage billions of money in terms of how long they've been investing. So their life and emerging manager life is going to be very different. The work that you do, the everyday work that you do, is going to be completely different. So you have to think about that. Generalist versus specialist. So there are funds that only do deep tech, quantum engineering, and there are some funds that only do climate tech, or within climate, they only do ocean-based technologies. And there are some funds like mine where we are generalists, but we have other constraints, such as we look at gender, we look at sustainability, or we look at UN SDG goals and things like that. So you need to, based on your strengths and what you like, what is your area of expertise, you need to now figure out what you want to do. And the other most important thing is within VC as a category, as a sub-industry, there are many stages and there are many facets of where you can contribute as a VC. So there are these accelerators and incubators where you actually helping the founders from idea up. And then there's very early stage, which is doing pre-seed to seed, and then early, which is doing C to Series A, and then growth Series B plus B, C, D, mid-market, which could be M&As, and then corporate VCs. So a lot of big corporates such as Unilever, Amazon, Microsoft, Meta, who else? Bosch. All of these huge companies, they all have their own VC arms or innovation arms. Because if you see, a lot of big companies do M&As, a lot of big companies acquire, or they buy talent. So they buy out a smaller startup or smaller companies. How do they know that? How do they know what's happening in the market? So the CVC arm is the arm where they also, instead of building innovation internally, they can also buy and acquire innovation from outside. So that's another very, very lucrative career to be in. Yeah, so these are the things that you need to consider, and many more. These are the things that were on top of my mind that you need to think about when you want to be a VC. And everything else you can learn, everything else you can acquire over time. Cool. Now, how does one get in? Once you've made the decision, how does one get in? What is the method to this madness? So the bottom line is, it is easy to break into the VC world when you already act like a VC. So the question then is, what does a VC do? What are they doing? Why do they have this God complex? There are three most important things that you need to do: know, perfect, or develop. One is sourcing. The most important thing for a junior VC is sourcing. So when I say junior, it's also from analyst to associate to senior associate positions. 80% of your work is going to be sourcing. So what does sourcing mean? It is your ability to find new startups that are interesting. It is your ability to find new startups as soon as possible before it's a commodity on the market. It's your ability to be networked with the right people in the industry, in different geographies and different ecosystems, to be able to find this talent, find these founders. That's one. And now sourcing, while sourcing is important, you can't do it by yourself. So you need to develop a network. So the network you're developing is not only to find new startups, it is also, let's say you're coming across an interesting startup, but you don't know anything about that industry. So who do you call up to understand, hey, is this worth enough, or is this fav, or is this bullshit? So you need to develop your network in terms of experts, in terms of your VC friends, in terms of your mentors, and these founders who might also then refer, say, hey, my friend is also becoming an entrepreneur. Do you want to speak to her or him? And industry expertise. This is where most people fail. This is where most people who have the aspiration to get into VC, who went to a top MBA school, and the MBA or your master's gives you that network, gives you that access to those, let's say, high functioning societies, high functioning ecosystems. But then what they fail to do is develop their own expertise or area of expertise. This is important because when you're interviewing, this is the most important value add that you bring to the table. So VCs, while they are generalists, they don't know and they can't know everything. So what they're thinking about is, okay, I know finance or fintech. Someone else in my in the VC fund is a PhD in chemical engineering. I'm looking for someone who's done sports tech. I'm looking for someone who's done gaming. So they're looking for that area of expertise. So you need to understand how can you plug into the skill gaps into a VC fund when you're interviewing. So you need to develop your area of expertise and market that very, very well. So these are the three things that VCs do. They source, they have network that help them do due diligence, and then the good VC funds are able to do that faster because they have the industry expertise, and then the deal gets done. Now, interview prep. So, the interview prep here is almost like, it's important. It's very, very important because it's not going to be like a tech interview where it happens on a single day called a super day. It's going to happen over months. It might happen over 2 months to 3 months period, where you have a large, long, elaborate process where you meet every single person in the team before you get in. Why is this important? Why should you meet every single person, from the most junior resource to the partners and the MDs and everyone? Because VCs like to operate as lean teams, and they need to know that you are a person that everyone in the team can work with, gel with, and there's a chemistry. And then, yeah, so I think that's why it's a long process. That's why breaking into VC seems hard, because you need to know someone, you need to be someone's friends, and then people internally tell you, hey, there's a very close friend of mine, or a founder of mine, or a techie of mine who wants to get into VC, and then it happens. Okay, so let's start from the top. Application. So VC jobs are not advertised everywhere. So you need to be able to find those right resources. There are a few now that are coming up, and then apply to them very, very well in advance. VCs have rolling interviews, so they're not going to wait until a cutoff date and then start interviews. As and when they get their get applications in, they'll start interviewing based on when their availability is. So find the applications, find the source of these applications, find a worthy and a credible source of these applications, and apply to them that day. Network. And your job or your application doesn't end there once you've posted your application. There's a couple of more steps to it. You need to reach out to employees, the analysts, associates, or anyone. Say, hey, I've sort of applied to your position. I really love what you're doing. I'd love to have a coffee. This is important because that's a pre-qualification for that analyst or associate or even a principal to then say, this person really went that extra mile and they reached out to us. Now, also remember, some of the funds, some people might tell you, hey, there's a conflict of interest, I don't want to help you out. So when you're writing that LinkedIn message, say you just want to understand who they are, what they are, and you want to understand the culture and the practice and all of that. I don't say I want your help with an interview, and they'll think you're getting that special preference. Some people might not help you with that. And the other thing, sometimes VCs might not respond to your LinkedIn messages. The other thing that you can do is reach out to their portfolio company founders. This is easy to find. Just go to their website. There's a lot of portfolio companies listed. Go to their LinkedIn, then just reach out to a few of them. At least one or two will reply, and then speak to them. This will earn you brownie points during the process. And then the prep. Once you've sort of done all of this, you've understood them, you've understood the kind of questions that they're asking, so you understand what they want, what are they really looking for. You need to really prep for the interview. So how do you prep? What I didn't do right is, I mean, everyone studies the fund. Everyone looks at their website, understands what's happening, what their thesis is. But what I didn't do well is I didn't study their portfolio companies. So some funds might have 50, 70 portfolio companies. You might not, there's no time, you can't know all of them. Their team members don't know all of them. So what you need to do is, if you remember, I said you need to pick your own industry expertise. So pick that industry expertise, go to their portfolio companies, filter if they've invested in those industries at all. So that should already tell you whether you're a good fit into the company. And then talk about why you like certain investments or why you didn't like certain investments. So think of this portfolio company talk or research as your time to shine. That's your way of sort of showing off your expertise, your knowledge, your understanding of the industry, your understanding of the business models, your understanding of the market landscape. So that's your time to fame, time to sort of really show off. Look at recent deals that happened in the industry. For example, let's say there's Peloton has recently done an IPO or something like that, or Yoga Bar has recently sold to ITC in India. So know about or learn about, read about recent deals that's happened, because they'll ask you, what is the most recent deal that you read about, covered, saw? Why do you think that's interesting? Or why do you think that's not interesting? So you have to have an answer. So what are these things saying? Is you need to know the fund in and out. You need to pick an area within the fund that you love. While that's good, you should also know what's happening in the overall market. So what's happening in the macro environment. Okay, now these things are easy. What people don't do is, or what people can do better is, search for podcasts and YouTube videos of these VCs, the funds that you're going to interview for. I felt this was a game changer for me in my process. Let's say in the first 5 interviews that I failed, I didn't do this. I didn't think about it. Then I realized every single one is on social media. Every one of these people are either on a YouTube video interview or a podcast. So after listening to them, and usually the partners of these funds are interviewed, I realized their framework of thinking. So some of the questions that they ask is how did you make that investment? So you understand what are the mental models that they're using, what is the process that they have internally. That gave me so much insight into what is the culture of the fund, how do they work. So I was able to present myself as one of the insiders. So I think that was instrumental for me. Yeah, I think that's your interview prep. Moving on also quickly, Varya, let me know how much time I have to cut it short. Then I'll be quick.
No, it's okay. I think you can go ahead.
Okay. So case prep. This was one of the most difficult parts, because one of the reasons I didn't want to pursue consulting was the damn case prep. It's not that I was not good with numbers. I mean, everybody can do basic multiplication and basic math operations. It's just that someone sitting in front of me and asking me what is 2 into 10, I would say it's 20,000 instead of the right answer. So it was just that under pressure, how would I work? Even though it's not something that you can't master, it's just practice. It's just that it was not for me. So then I realized VC is not any different. They also love case studies. They love doing market sizing. So I had to go and make myself practice all of these cases, the case studies, the market sizing, and all of that. And where do you find them? You need to go to the internet and look at MBB case study practice or guesstimates, and then you practice them. So this slide should tell you what, apart from knowing the fund, apart from knowing the market and the macros, what are the quantitative and the tangible things that you need to prepare for to really crack the interview. So it's market sizing at the analyst and associate level. I'm assuming most people that will listen to this are either at these levels. If you're getting after an MBA, if you're doing an MBA without any work experience, less than 2 years of work experience, you will start as a senior analyst. If you have 3 to 4 years of experience in a slightly relevant field, then you'll start out as a junior associate. So you have to do market sizing, and please start preparing for your market sizing cases as early as possible. One mistake that I did was I would apply for these things, and then I know my interview is coming 1 month down the line, and then I'll start a book. And then I started practicing cases, which was completely detrimental to my mental health and my focus and my confidence level. So what I started doing was I started practicing a couple of cases every day. I'd get up in the morning, I'd just I'd read the news and see, oh, there's something in supply chain. Okay, let me find a case in supply chain. Let me just solve that. What it really helped me with, other than numbers, is how to solve a problem as quickly as possible. If someone who's producing, or there's a new startup that is producing new two-wheelers, a new extremely ergonomic and energy efficient two-wheelers, and they're giving me a market sizing projection, I was able to then tell, hey, you know what, that looks a little odd. That's nonsense. That's not going to be how it is. So why is it important to do market sizing is your ability to sense check numbers as the founders are pitching to you. I think that's the most important takeaway from a market sizing, because otherwise everybody can put numbers into Excel or use calculators and come up with complicated numbers or big calculations. Then investment thesis prep. And mind you, this is different from an investment memo. So what is an investment thesis is, let's say you're this gamer and you're extremely passionate about gaming and you're going through an MBA, so you want to sort of plug in as a gamer VC. Then you need to have a thesis. So what does a thesis mean? You need to look at, okay, this is what's happened in the last 10 years, but these are the emerging technologies that's happening. These are under research and development right now. So the next 10 years, these are the top things that's going to happen. So that's your view of what do you think is going to happen in the future. So you need to have a very, very strong view, or a view of what's going to happen in the future. That's much better than not having any view at all. You could be wrong. Everyone is wrong. So as you get more data, then you refine your thesis, you refine your outlook of the future. That's okay. But you need to have an investment thesis. So this is not a question that they asked me during my interview. One fund They asked me to prepare an investment thesis for them in the future of longevity and future of psychedelics. And they gave me 3 days to do this, right? So they always give you a case on Friday and you need to submit that on a Monday. So I had to prepare an entire investment thesis for them in 3 days' time. And then there's an investment memo, which is the most used or the most preferred method during an interview. So what they'll ask you, there are a few ways to do this. What they'll ask you is, okay, based on my fund's thesis and the stage and all of that, why don't you pick a company within these 2 industries and pitch that to us, and why we should invest in them. So that's a usual question that you'll get asked at the analyst and associate level. And what needs to go into that? Because this might seem like what the hell? Should I write a 40-page thesis? Should I write a 40-page memo? No, it's usually 2 pages. And I've sort of marked down or listed down what are the important things you need to consider. So the top 5 things, especially in an early stage startup or even until Series A, is you need to ask 5 to 6 questions. And then your thesis or your memo is answering these 5 to 6 questions. I've sort of written them down, but always think, keep it simple, stupid. So you don't have to write in flowery languages, use bullets wherever you can, make it very, very simple, because no one's got the time to read a well-written thesis, well-written literature essay, no. So brevity, simple structures, simple terms, bullet points whenever you can, and brevity, yeah, concise. 2 pages, not more than that. So they'll actually read your memo. Otherwise, they're going to look at it and then like, too long, didn't read. I'm not gonna read. You don't want that. You want to really show off. You want to really say how critically you've thought about these things and you want them to read it. So simple, brief, concise. So I've already written down a few things. Just feel free to go through them. Maybe I'll also send the slides to you, Maria. And the most important thing that they will ask you to do is a cap table modeling. Cap table modeling of financial analysis based on the different stages of the deal. So if you're doing a Series A plus fund, they'll ask you, hey, we are doing a Series A investment in a company. Why don't you do this cap table modeling and send us whether we should invest in them or not? Sometimes they'll ask you specific scenarios on different kinds of instruments that the fund is investing in based on whether it's equity or debt. Within debt, there are different formats. So they're just testing whether you know these terms or you know how to sort of maneuver around these things. Yeah, so once you've sort of applied, you've prepared based on yourself some basic VC interview questions, and then the case prep will come if you're advancing through your stages in the interview. These are the things that you need to know, you need to work on, you need to consider or really start reading about. Yes. Now, reading recommendations for anyone who is new to VC, who wants to get into VC, or who's already in VC, or some kind of buy-side finance. So I've sort of included 0 to 1 here, which is actually a startup story and not an investment case, because you need to understand how a startup works, how a good startup works, actually, how can a really good startup perform, how they should think about their structures and their policies and their people from 0 to 1. It's an outdated book. There are new strategies and new ways of thinking now evolving and coming up, but that's a good fundamental for you to know. And everyone in VC will talk about 0 to 1. So you better have that reference. Venture Deals, it's a really, really cool book, which really goes into the depth of every single thing you need to know. Please read that. Secrets of the Sandal Road, again, a US-based VC, who's written about, again, what happens inside a VC, how do they think about deals. How to Invest is a new book. This is not from a VC perspective, but David Rubenstein, who's the MD of one of the biggest private equity funds, so this is a collection of his interviews, and he's got some crazy interviews. You have to check him out on YouTube. And in this book, he's sort of broken down into different asset classes. He's got debt, hedge funds, VC, early stage, late stage, private equity, M&As, secondaries, blah, 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 all of that, public markets, equities. So if you read his book, you get into the mindset of some of the top leaders in these different industries in finance. So that's interesting. Hard Thing About Hard Things, again, how to be a good CEO, what happens inside a startup. And another really interesting book, it's a new book again, is The Power Law, which is a beautiful book written on how should one understand and think about the VC as an asset class, VC over a period of time. What are the things that happens? Why does it happen? Why is VC that lucrative industry, lucrative asset class? Why are people pouring money into that asset class? So some few recommendations, but really, really good books. And then, so a few resources and blogs. So I've sort of put together a interview prep question bank, which I've sort of shared with my Oxford network and my peers who also wanted to get into VC. So I've sort of linked it there. It's a Google Doc, yes, and a few blogs. And I've also written down a few newsletters and blogs you can subscribe to if you want to think, speak, and act like a VC. I think that's it. Thank you so much. I think, yeah. So I'm gonna stop sharing now.
Jaysri. I think we can now start with the questions. I think there was one on resources, which has already been answered. Let's start with a few I've already received, and then we can take some from people here. The first, I think, is, you talked about sort of thinking through the multiple ways in which you can consider both your MBA application process as well as careers post MBA. But actually, when you're going through it, often you have more information and a lot more happening that it becomes difficult to process and sort of compartmentalize it. What were things that you did that helped you think through it, right? Like you were talking about the 4 verticals you mentioned with consulting, IB, everything. What was sort of that moment of eureka that helped you realize, okay, great, VC is the right fit for me? How do you sort of filter all the signal from the noises?
Yes, that's an excellent question. And I think I was lying to myself when I started my MBA journey, in terms that I really didn't reconcile what are my strengths, what are things that I really like to do, what gives me joy. I didn't look at that. I didn't reconcile with what are the job opportunities, what are the industries that I can get into, which sort of aligns with who I am as a personality. I really don't like doing detailed 3-statement modeling. I'm not that kind of person. I'm not the kind of person who's looking at details. I'm the big vision, big thinking. I'm the creative person. So I think through my MBA, even before that, I kept ignoring who I am. And that really led to a lot of wasted time, a lot of wasted applications, a lot of rejections. I think people should lean into who they are as personalities, because as you grow older, as you mature into your career, you only have to play your strengths. You have to play your strengths to understand how much you can add to the company, to the stakeholders, to the world, when you're leaning into your strengths, when you're leaning into your passion and what you really like to do, and really stop forcing things that you don't like. So I think in the beginning, I was forcing myself to do things that is not me, and then that really didn't work out. So once I sort of stopped going behind the shiny things, stop going behind pursuing things that looked good on paper, that looked prestigious on my CV. I think once I stopped doing that, it was very, very clear. Then I had this really very organic journey into becoming myself, becoming into the VC that I am today. I think that's the formula. Yeah, just be honest to yourself and really don't pursue things just because they look glamorous. So that's the right thing to do. Yeah.
That's super helpful. The other thing you mentioned was actually speaking to a lot of people, right? And I think when you were specifically talking about VC, you got a lot of negative or mixed feedback, where you had people say sort of, maybe you're not a right fit, you don't have the right kind of background and experience. So the question is 2-part. One is, when you are taking time from people who are fairly senior, fairly busy, how do you make the most of it? How do you ensure you're creating a conversation that's helpful for both, and it doesn't sort of get reduced to a transactional exchange where you're just asking? And the second is, how do you filter the advice? How do you realize whose advice you should actually take seriously and whose advice it's smarter to discard and ignore?
Yeah, that's a good question. So the first one, how do you make it worthwhile for them as well? So, this is this is this is so hard, isn't it? First of all, you're thinking 1,000 times before reaching out to that person on LinkedIn, thinking, oh, what if they don't reply? What if they don't do this? If they replied, what will I speak to them? What will I ask them? So first of all, you're going through an internal war of what am I going to do? Will this person take me seriously? The second thing is, if at all they say yes, and then you're so awkward during the call, you're so self-conscious that you really fuck it up. And I've realized, I've thought about this so much, even not only during my MBA, even now. So when I go to some conferences and I'm speaking to partner of BNP Paribas in Norway, what am I actually going to help her with? What do I have that she doesn't have? What am I really going to offer her that she doesn't know? What is the insight that I have? So I've realized, okay, there's very little that I can offer. So, but what can I offer? I can offer a really intriguing conversation. I can offer really intriguing, thought through questions. So that's not wasting our time in the first place. So I've made it a point that whenever I get into a conversation with someone, I am the most well-researched person in that conversation. I've already went through their LinkedIn, I've already went through their blog or whatever that they have, any sort of social media that's available. So I'm not asking them questions. It's already out there and they've spoken about it 10,000 times. So just making the conversation interesting for them is amazing, because these are the people that are having 100 conversations in a week. They're bored. They want to have somebody new, somebody having a strong opinion, somebody really asking the right questions. It's not superficial. So I think just having a really meaningful conversation, well-researched conversation, is definitely worth their time. And it shows, right? The fact that you've put in that effort, you've done your homework, really shows, and they remember that, they appreciate that. This also happens with me when I'm speaking with founders that are doing Series A plus. They really remember me because I was the one that's well researched. I read all the materials that they sent me. I've also read about what others are doing, who is a consultant that they're having for hiring. So I know all of this information. So my questions are not level 1, they're level 3. I think that is a huge, huge help and favor you're doing for the other person. Other than that, you're not going to help them with CVs. You're not going to help them get a career. I think just that 30 minutes or 20 minutes of interesting conversation is good enough. So yeah, so just be well prepared. So that's the first answer. And they know that you're seeking help, and they know that you're asking for advice. So they're prepared for that conversation. There's nothing that, not always, there's nothing that you can really help them with, because they're in a much better position that you are. Okay, now the second question was it? Sorry, I forgot it.
No, that's all right. It's on discarding advice and sort of
yes.
filtering ones and
Yeah.
picking which to take and which not.
Yeah. It's hard in the beginning. It's hard to really not think about the harsh feedback in the beginning, because you're not there yet. You haven't succeeded in your journey. So you're thinking maybe there's truth to what they're saying. But then I think you'll be sad for a couple of days. You will maybe cry about them for a couple of days with your friends. But then, you look at the choices that you have, and you look at, out of the choices, what's the best choice that you have? What really brings you joy in terms of preparing for the interview and really the journey. So I think when you think about when you think about yourself 5 years down the line and where you see yourself, and if you really want that vision, then these sort of harsh feedbacks fade away in 2 to 3 days time. But also what I would advise is collect these data points, and sometimes they could help you in terms of thinking differently, or reversing the narrative and thinking about, is this something that I really want to do? Maybe there's truth to the feedback that they're giving me. So collect these data points, but imagine yourself 5 years down the line and see whether this feedback adds any value. Does it really encourage you to become a leader? So I think it's a little bit of collecting data points for now and then long-term thinking, because some of the questions they ask me, you're such an odd candidate. What can you bring to the table? Then you critically think about what do you have to offer that these consultants and investment bankers that don't bring to the table. What is your unique value add to the table? So then you add that in your pitch, you add that in your elevator pitch and say, this is what I bring to the table. I think I have new fresh perspective. Or in my case, I was able to say, I worked in one of the fastest growing, toughest economies in the world. I think I can find out what's some good entrepreneurs in Europe. So I think some questions really help you think critically and bring out the strengths in you. Yeah.
Absolutely. The next question is, you mentioned, I think somewhere in your presentation, about how often getting in or starting with VC is just trying to act like one till you become one, right?
Yeah.
While that's helpful, I think from a lot of network capital members, especially early people in the VC space, a challenge they face is that of imposter syndrome, which is that, when you are acting, you don't know where to sort of draw that line, how to sort of negotiate with it. Do you have any advice for that?
Isn't that the toughest question? Because I sometimes feel like an imposter even now, but I think it's okay. It's okay. So what I'd say is, so there's a concept. I forgot this gentleman's name, where when you're starting at something, let's say you've read one of the books that I've suggested you, then you are on the peak of, oh, I know everything about VC. And then as you learn more and more and more, you get into this valley where you think, oh shit, I don't know anything. I need to learn more and learn more and learn more. And then you're really an expert. So I think it's called the valley of stupidity or the peak of wisdom or something like that. I forgot. Oh, yes. You got the name, the Dunning-Kruger effect. I think that's pretty much it. So the acting like a VC is not just, it's strategic and it's got a lot of work to do. For example, let's say, what does a VC do? They invest in companies and they have a portfolio that they manage. So when you're not a VC, but if you're interested in them, you inherently start looking at, oh, these are the new technologies. What are the new companies that are coming up? So I think if I had the money, I would invest in them. Start constructing a portfolio for yourself. Or let's say Sequoia invested, or, if you read the news, A16Z recently invested in Adam Newman again, who really fucked up WeWork and then it was restructured, blah, blah, blah. So maybe you have a point on, what, I would never invest in founders that have a history of doing something wrong, that have that have the tendency to burn cash unnecessarily. So you can sort of have your own portfolio and anti-portfolio and see and track them over let's say a year. Say, okay, so Peloton was valued at 40 billion when they went to IPO, but my view on them was it's a piece of crap. It's just a cycle that's glorified. And then you say the value going down, so you're right. So I think being and acting like a VC is, if you're really interested in being one, you'll be so excited at constructing them on an Excel, and you will speak like one. You'll already have those networks. Yeah.
Great. And one final question, I think, before we can open it up for the audience is, like you mentioned, early stage VC is a lot of relationship building and getting the right networks, deal flows, experts, opinions, all of it. And I know specifically you've taken a content approach to it, at least passively. I've seen you post and be active on LinkedIn, have your own blog, sort of try to put your opinion out there and use that as a way to become memorable, as well as get more inbound and get interest from other people instead of you back, think about the same process of using content to scale yourself and your presence. And for those getting started, what should they think about?
So is the question around, is content good strategy? Is that the question?
I think that's a simple yes answer. The question is, how do you make content work for you? Because
Okay.
on a platform where everyone is creating content and
Mm,
everyone's writing
mm,
content,
mm.
how do you sort of stick out, and how do you create content in a way that makes sense for you, right?
Yeah, that's an excellent question. So this is something that I've been working on, that I've been trying to understand is that, and I have a mentor who put it very, very well. So she told me, why are you assuming this is what they want? Why don't you just ask them? You have the opportunity through your job to speak to these founders and these very early stage diverse entrepreneurs. So FundDev invests only in gender diverse founding teams, which means I have the biggest opportunity of speaking to so many female underrepresented founders, minority founders. So every conversation that I have with them, I just ask them, so what do you think is helpful for you? What would you like to know? Where can I add value? How can I help? So I think I've sort of gathered this information from them, and I also am part of different WhatsApp groups, and I really use these groups very, very well in terms of, I just put on a survey and ask them, would this be useful to you if I did something on this? Would that be helpful? And then I asked, and I've also done a ton of research on market research, desktop research on why female founders get only 2% or 1% of all the VC money in the world. So I've sort of done that desktop research, but I've not assumed this is what they want. But then I've used all these WhatsApp groups to understand what they really like. And I love hosting, coffees or like dinners at my place where I speak to them about, what do you think is lacking? I think then I sort of use that to write my content. Some of it is also my journey. What are the struggles that I've had? And some of it is, what do they actually want? Can I be helpful? So I think these are the two things that have helped me make the content useful for them, which in turn is useful for me. Yeah.
Got it. No, thank you so much. That was really helpful. So with that, we can open it up for people. You can either put your questions in the chat or just unmute yourself and go ahead with the questions.
Hi, Jaysri. Good to see you. Zeus here. Really good to see
Hello.
you mentoring and at this stage of your VC life. Thank you for sharing. Just wanted to touch on the point of investment memo, right? You've given the framework in terms of how to write it, and you've mentioned to keep it brief. Maybe you could run it a little on 2 or 3 points on really what makes a better investment memo that's prepared by a VC professional rather than someone that's just trying to write his or her first investment memo. Yeah, what makes it good and more on point?
Absolutely. That's a very, very important question. So I'll start with my mistakes. So I thought investment memo was a well-researched, the most well-researched piece of 2-page document, but that's not it. So what I do is I write 4 pages of, this is what the market is, this is what Bessemer says, this is what A16 says, and this is the market landscape, these are the competitors, this is the evaluation. No one gives a shit about that. What they want from a prospective employee or a team member is help them make a decision. So instead of giving data points after data points, and it becomes a summary of literature survey of what's already in the market, and no one gives a shit about that. And I've lost such good interviews, including Seedcamp, Creandum, MMC Ventures, which are some of the top VCs in Europe, because I didn't tell them whether I should invest or not. So the right way to frame your investment thesis is, the first thing you need to write about is whether you should invest or not. So you give them the conclusion first, and then you deep dive into, these are the top 3 reasons why, right? Or you can take another strategy of looking into, these are the most important things that I've looked into. Second page, let's double down on the most critical points, which is either pros or cons. So, and this doubling down is the most important thing, because the doubling down, you get into the most details, and then the conclusion of that is, based on these top 3 points or the most critical points, I advise not to go ahead with this. So your decisiveness with the most limited information that you have is the most valuable skill that you bring to the table. Because during the interviews, and it was so stupid. So this partner asked me, okay, will you invest in them or not? Then I was stupid to say, oh, if I had more information on this, and this, then I would make a decision. But that's dumb. You never have all information. You never have perfect information. So I think that's how you structure your investment memo.
And the salient points, right? The top 3 points, are they usually the factors that we already know of, like, scalability, unique competitive advantages, especially if this area is outside our area of focus, right? Is it, the common themes that you would expect that
Yes.
other VCs use? Got it. Yeah, thanks
Yes.
a lot, Jaysri. Very powerful.
Thank you.
Shubha, go ahead.
Hi, so you will see my daughter on screen. I mean, this is reality. I am a mom with 2 children, right? So I sit on the other side of the fence, as I introduced myself before. I come from the founder lens, right? So what is it that, so I understand that your fund is a diversity and inclusion fund, and I'm sure the Women Network will be very appreciative of that. So when you have to make the decision of potentially investing, then what are some of the, I mean, you don't have to name top 3. Well, maybe if you can, what are the top 3 things that you would look at?
Sure. I actually want to address the question that you had before, which is a fully drawn out 3-statement modeling important for a pre-seed company or a company that's just starting out? No, it's not important. That's not necessary. And we all know it's made out of thin air, and garbage in is garbage out. And whatever you show on the first day is never the right thing that's going to happen. But what's important is to know what is the founder's view for their own future. What is a founder think they can achieve in the next 5 years? So that financial forecast or your revenue forecast model is a testament to your knowledge of the industry, your ambition, and your goal. While most of it, founders can either surpass their forecast or not do their forecast. I mean, underachieving their forecast, but it sort of gives us an understanding of, do you know what you're getting into? For example, if someone's in fintech, someone's in pure SaaS, and their growth projections is not in par with what's happening in the market, then we know, hey, you don't know your industry well. Or if someone has a hardware company or a food company and their projections look like a SaaS company, then we know, you know what, you have to go do your research. So that's just, it's a way for us to understand, does the founder know what they're talking about? That's all that we need. Now, going back to what are the top 3 things we look for in an investment, be it a diverse investment or anyone else. First thing I want to say is in FundF, we need to have at least one female founder with material ownership stake. So female founders are not having 0.5% ownership that's vesting 4 years from now. It needs to be equal or material. So apart from that, 3 things that we look at is the market. How big is the market? And is the market growing? Sometimes a market doesn't have to be $1 trillion market, but if it's a niche, but it's fast growing, it's developing, and the market is growing, that's good enough. So we're looking at market that's growing, expanding, and then the problem. One of the most things where founders fail or where founders get rejected is they don't understand the problem very, very well themselves. And we can sort of tell because let's say I'm looking at femtech, someone who's working on fertility. I see 10 pitches in a week from other founders or other startups that are trying to solve the fertility issue. And then I know from this founder, how deeply do they understand their own problem and their own market? If that's not clear and if that's not established in the first 5 minutes of their pitch, then I know they're beating around the bush or their storytelling, their narrative is not strong enough, which means they're not clear in their thinking. And the third most important thing, especially in an early stage, is the team. The team is important because that's the CEO or the founder's ability to bring in talent when there's no money. So their ability to sell their vision and attract talent is the most important skill. And a team is what is going to take that vision, what's on paper, what's on pitch deck, and drive it to success and implement that. So I think these are the top 3 things.
one piggybacking question. Do founders ever get second chances? Like, the example that you gave is that they may not know their market properly, or they're in manufacturing, but their growth looks like a SaaS market. So you're like, please go do your research, right? So let's say they go do their research and then they come back to you. And this could be a very specific question for your fund, or maybe in general, I don't know. Do they get second chances at all?
All the time. All the time. See, now, but there has to be some method to the madness. So let's say I give them a feedback and they come back to me 2 days later and they've changed the numbers on their pitch deck, but they've not materially changed anything of the business the way they think. That's not good enough. But let's say the founder goes back, takes in the feedback. I'm sure they're getting similar feedback or different feedback from other VCs. In case that they're sort of taking feedback and they're pivoting or readapting their business, whatever they're doing, they take 2 to 3 months. Or in that meantime, they're sort of getting into an acceleration program or an incubator program. I think that's good enough. So one of the green signals that we also see is how adaptable or how receptive are the founders to feedback that VCs give them. So I think, yes.
Thank you. Thank you so much. Really appreciate amazing session. Thanks.
Thank you.
Thank you. Do we have any more questions?
I saw one. Oh, I think that question is answered on the chat. Yeah.
Yes. I'll ask one last one and then maybe we can conclude. I think we talked a little bit about content for deal flow, right? And how you're sort of getting that inbound interest. You mentioned something interesting when you said, you host dinners and coffees and all of those things, which is more in the realm of community building. I wanted to understand from your perspective, both as an individual and as a fund, how do you approach community building? Do you think that's relevant or required? And I'll also sort of juxtapose it with sort of the analogy you used of new funds and vintage funds, because I'm assuming the approach for the same thing will be different across these.
Yeah. Yes. So I'll start from the last question. So the approach for an emerging manager and a vintage or a well-positioned, well-established fund. So while the approach of community building and content is different, the difference also comes from the availability of budgets, right? But if you look at some of the big investment houses today, they're all content generators, from the top partners being on Twitter and having a mass following, to A16Z having podcasts, videos, and tons of newsletters and research reports that they produce every day, every month. And Bessemer Venture is extremely well known for the reports that they produce in terms of cloud companies. And they also publish all of the memos. So if anyone wants to read up on memos, so Bessemer Ventures has something called SaaS memos, just check that out. So I think a lot of these VC companies and financial companies have adapted themselves to a new age company for the age of social media and for the age of content. That's the easiest way someone can discover you, right? So that's one. Yes, a lot of companies are doing that, but they're doing it in different scales based on the budget. Some have partnerships with universities. Now, this first question, how important is community building? Is it relevant? I think it's absolutely relevant. It's relevant to have a community that's got high engagement, rather than having 100,000 community where very, very few people engage and participate. So, and yes, it's relevant. It's important to have a high engaging community, but why is it important? So one of the common mistakes that I see, especially in first-time founders and underrepresented founders, is that there's a lot of talk on media, LinkedIn, Twitter, our press, and everything, where everyone's successful. Everyone's had this golden era. Everyone's got the Midas touch. Everyone's got the goose that's laying golden egg. But that's not true. There's so much bias in the stories that get covered. So what's happening is no one shares their mistakes. So recently, there's a lot of buzz around P2P secondhand consignment or P2P marketplace, especially after companies like Depop and Vinted came. A lot of new companies cropped up all across Europe, all of them doing same thing, same mistakes, but none of them were talking to each other. So once I spoke to like 5 or 6 of these companies that were doing the same thing, I asked these founders, do you have a group for companies that are doing P2P, secondhand clothing, circular economy? She was like, yes, we have a WhatsApp group. All the founders are here. Then I'm like, why are you not talking about the mistakes? Because I spoke to 3 of you and all 3 of you are making the same mistakes. So they're not learning from each other. So I think a community that fosters open communication in terms of, failure, so others don't make that. So having that high engagement is super, super important. And not only in terms of the mistakes, in terms of resources, a lot of founders that I know are looking for branding consultancies, looking for accountants. So this collective intelligence and collective wisdom, if shared properly and channelized, I think is very important and can be very exciting. Yeah.
No, absolutely. I asked that because we get this question very often on network capital, both for sort of individuals trying to build communities around themselves as well as organizations. So I'm sure your answer will be really helpful. Thank you so much, Jaysri, for your time. I'm sure this will help a lot of people think through careers and business school decisions. For those who are watching this later, if you have questions for Jaysri, you can write to us and I'll make sure they reach her.
Thank you, Varya, for having me and hosting this session. Loved all the questions, and I wish all the best to everyone who's in the session today and who watches it at a later point in time. Yeah.